I think we can get started. Thank you very much, everyone, for joining us today. My name is Andrea Armeni. I'm the Executive Director of Transform Finance and the lead convener of the Transform Finance Investor Network. Welcome to today's webinar on putting the activist in shareholder activism, topic that is very dear to our heart and that will not surprise you as being part of our programming. I'm glad that you could make the time to join us. I am joined today by Eli Kasargod-Staub, who is the Executive Director of Majority Action. He has been an organizer for a long time, and he has been spent his career working on shifting the dynamics of power in the economy. Again, something that makes him a close friend of Transform Finance. And has a long-standing focus on shareholder activism. After 12 years with the Service Employees International Union, leading research and capital strategy teams, he moved to being the executive director of Majority Action, and he has the designation of Chartered Financial Analyst. So he has been a great resource. I'm glad that he could join us again after having done a great session with us a couple of years ago on excessive share buybacks, when the topic was still not as prominent as it is today, and he really helped our community crystallize its views on that. I will turn it over to Eli in a moment. First, I wanted to give you, as always, a couple of quick updates on our current work. First of all, Transform Finance is hiring a research manager. This is going to be a very exciting position, really a leadership spot for somebody that can help us both carry out our extensive research program and design the research priorities for the next few years. So if you know anybody who might be a good fit for that position, please make sure to put them in touch with us. We literally just opened it today, and if anybody, the folks on this call should know somebody that might be a great fit. We're just back from a whole series of events, from the GIN investor gathering in Paris, from SOCAP. We saw many of you at SOCAP. Thank you for saying hi, especially to those that came to our 5th year birthday celebration. It was great to see many familiar faces there and create new contacts among you. One thing about SOCAP that I wanted to highlight, we collaborated with the content team there to do a whole track on alternative ownership, both exploring topics that we've been talking about for a while around employee ownership, conversions, and how to finance conversions to employee ownership, but really got also into some of the more innovative notions, such as the steward ownership model that Purpose Capital has been putting forth, where we had a couple of case studies on current transactions, as well as a plenary presentation that we did with Kat Taylor from Beneficial State Bank and Robin Verghese from Open Society Foundations on the need to refine ownership away from the notion of shareholder primacy and from this commingling of governance rights and residual economic rights that has, in large part, I think, can be blamed for getting us to the point where we are today, and the need for serious transformation in that space. And in that context, we recently put out an investor briefing called "Shareholders Are Stealing Our Jobs." Was picked up as a shorter piece in Fortune magazine. I encourage you to take a look, where we're arguing that really employees ought not to be seen as a liability, as something to be minimized, but are core to a thriving economy in general. And as we analyzed with our colleagues at NYU Sturm Center for Sustainable Business, some of the dynamics of the future of labor, as it's come to be known, so that really the fundamental underlying dynamics were not around the robots that are coming or the immigrants or offshoring, so much as really the notion of short-termism and shareholder primacy as being the main driver of low-quality contingent work. and investors have a role and responsibility to play in that space. And we make the case for both why investors should take that responsibility and how they can operationalize them through public equities, private equity, private debt, mezz debt, and I'm really quite glad to see that has gotten picked up in the conversation around how shareholders should be looking at the future of labor. Another interesting initiative that launched yesterday from Candide Group, from my co-founder at Transform Finance, Morgan Simon, and her colleague and my board member, Aner Ben-Ami, an initiative to move money out of the prison system called Real Money Moves, that has mobilized a lot of celebrities, from Alyssa Milano to the cast of Orange is the New Black and NFL players, to really get folks to think a little bit differently about the responsibility of their money and whether they want to be complicit in the investments in mass incarceration that we're seeing these days. So I encourage you to take a look at that initiative as well. I mentioned in the context of the SOCAP update the steward ownership model that we have been exploring. Candide Group and Aner have been part of the conversion of organically grown company to a trust model steward ownership structure. It's probably one of the most exciting transactions I've seen in a while in terms of how governance is distributed among multiple stakeholders, and how the profits also are shared beyond shareholders, also to employees and other stakeholders of the company. So keep an eye out for that. I encourage you to sign up for it. It will be Tuesday, December 11th. Now let's get to today's topic, and the activism in shareholder activism. You won't be surprised, as I said, to see that we are tackling that now. It fits with some of the other initiatives that we've been pushing forward. One is the effort that many of you have heard about and participated in building new strategies for social change in the public equity market. So really identifying and repurposing financial innovations to strengthen a toolkit that historically has only included the type of shareholder engagement that Eli will be analyzing and deepening in a moment, or the divestment campaigns that we are familiar with. So what we're trying to do there is to say, are there any derivatives in particular? Are there any short-selling hedge funds, an idea that Eli brought up also a couple of years ago, that can be driven by the movement itself, right? Where it's not a matter of alignment, but it's a matter of driving the social change through a richer, more complete toolkit for activism. This also fits on the other side of our work, as many of you know, even though it's not directly linked to the investor network work, is the pathways that we try to create for social movements, for activists, for community leaders, social justice practitioners, to reclaim their role in the finance conversation. So we have a new cohort model that complements our traditional or flagship Institute for Social Justice Leaders. It's kind of like the advanced version. It's a capital strategy cohort for organizations that might be a little bit more advanced in their exploration of how they can engage with investors, both in order to succeed on campaigns, but also, which is our ultimate goal, in turning the shareholders themselves into practitioners of social justice, or investors themselves, let's say, rather, into practitioners of social justice. So if you're joining us and you're more on the activist, social change leader side, I encourage you to get in touch with us to learn more about the capital strategy cohort that will be starting, I think, in a couple of months now. So with that, I will turn it over to Eli. Thank you so much for joining us today, Eli. It's a pleasure to have you back with us at Transform Finance and for the Transform Finance Investor Network presentation today. Let me see if I can assign you privileges so you can move this. There you go.
Hello, everybody. Can you hear me?
Yes.
Yeah. Wonderful. Now I'm going to attempt to do my own tech piece here. And can you see my screen? Can you see my presentation?
Yeah.
Excellent. All right. Good morning / afternoon, everybody. I'm thrilled to be here and profoundly appreciative, as always, for Andrea's leadership and the leadership of the Transform Finance Investor Network and all of the incredible work of this organization. It was good to be with many of you at SOCAP, and I'm thrilled to get to be sharing with you all today some of the work that we've been piloting and driving at Majority Action. Majority Action is a new organization that we created this year, and it is built on the audacious idea that perhaps our shareholder activism could be a little bit more transformative in the mode that Transform Finance advocates across all of our capital market interactions. I wear two different hats. I am both the executive director of Majority Action, and I'm also a partner at an organization called Springboard Partners, which I just want to say a word about for a minute. Springboard is a venture collaborative that was started by James Rucker, who was the co-founder of Color of Change and a series of other startup ventures, and Carolyn Laub, who was the founding executive director of the Gay Straight Alliance Network. And they founded Springboard to be an incubator of both social justice campaigns and startup ventures, both nonprofit and for-profit, designed to be scanning the movement landscape and identifying opportunities where new strategies or tactics or organizations could really help shift the dynamics and create more power for all of our movement work. And so Majority Action actually was launched through Springboard. And as I was saying, I am now the executive director of Majority Action. So let's dive in. We have a problem in our economy, which is that we have many problems, and among them, but very, very large among them, is that public companies are powering the perils that are facing our planet and humanity. And a lot of that comes through the pursuit of short-term gains at all costs. We see this across every sector of the economy and in every issue area, whether it's in climate or through, as Andrea was talking about, the use of excess share buybacks, spending billions, hundreds of billions of dollars buying up stock in order to boost share prices in the near term, while taking on tons of debt and shedding employees that undermine the ability to undertake real long-term growth. And this goes on and on throughout the entire economy. But here's the other element of that problem, which is that although shareholders have powerful mechanisms to rein in harmful public company behavior, our shareholder activism is failing to hold public companies accountable to the degree that we need to be. I want to be really clear. Shareholder activism has done a tremendous amount of good and accomplished a tremendous amount of change over the last 30 years. And this is an and, not a but. And we are not operating on scale in terms of confronting the level of problems that we're seeing. And when I say powerful mechanisms, I mean specifically that shareholders have a particularly direct form of power vis-a-vis public companies. When we think of shareholder activism, we typically think of things like dialogues with companies, or we think about shareholder resolutions and campaigns to pass shareholder resolutions. We start from a different starting place, which is to say that shareholders ultimately have control of the public corporation through the board of directors and through their votes on the board of directors. And that we believe that our shareholder activism as a field is leaving a considerable amount of power on the table by not actually kind of escalating and stepping up our campaigns to be able to actually hold boards of directors accountable. So let me speak about kind of some of the, just to get under the hood about how we see shareholder activism not yet fulfilling its full potential. There are a couple dimensions to this. First, companies are getting more and more sophisticated at managing investor engagement. Companies didn't used to have this, but now just about every major public company will have an investor relations department that is extremely adept at figuring out how to engage with and how to have dialogue with, and sometimes how to have productive dialogue with, and often kind of tie investor advocates up in endless conversation about all of the sort of environmental, social, and governance kinds of issues. Companies are even learning how to lose and still win. I'll give you an example. There was an incredibly important campaign that was fought over a series of years and culminated in 2017 with a victory at ExxonMobil, along with a series of other oil and gas companies, around the need for those companies to disclose what it would mean for their business if they needed to be restricted to a 2-degree scenario level of oil output, and the changes in prices that would result. Exxon lost this monumental shareholder battle. They fought as hard as they could to stop their shareholders from being able to win this, and 62% of ExxonMobil shareholders voted in favor of it. It was really phenomenal. And the following year, Exxon issued their first 2-degree scenario report. And like other companies, particularly like Chevron, these oil majors basically put out a conclusion that it didn't really matter what would happen under a 2-degree scenario. Their reserves were going to be just fine, right? Which then sort of puts investors back in the position of like, okay, well, now we have to have an argument with Exxon about whether their disclosure report is right or not. And meanwhile, the IPCC has told us that we have just over 10 years to fix our to get ourselves off of the climate crisis train that we are on, and we don't have that kind of time for that endless dialogue and back and forth about those kinds of things. So that was the first one. I realized I clicked through these a little too fast. Let me come back here. I want to talk for a minute now about the largest asset managers, companies like BlackRock and Vanguard. These are companies that are the largest shareholders in just about every publicly traded company in the country, certainly all the largest ones. And they got that way because they are the largest index fund managers, meaning they run the index funds, both mutual funds and exchange-traded funds, ETFs, that simply own a slice of every company according to how it's represented in a given index. Those are not active funds. Those same companies, BlackRock and Vanguard, also have active funds. But what's really driving the bulk of their ownership are these index funds. What this means is that these are not managers that are making active decisions about whether or not to hold a given stock. They just hold it by virtue of it being part of the S&P 500 or the Russell 2000, et cetera. It often seems like the worse the company, the larger the stake that BlackRock and Vanguard hold. We're going to talk about gun manufacturers today. BlackRock and Vanguard together own 25% of the largest gun manufacturer in the country, which is Sturm Ruger. BlackRock, which is the largest fund manager in the globe with over $6 trillion in assets under management, has become a little famous in recent years in the sort of ESG space. Larry Fink, its CEO, puts out these annual letters every year where he will sort of reiterate some sort of broad call about how companies need to demonstrate that they have social purpose. That was the one from this from this past year, and it generates a tremendous amount of news, a tremendous amount of publicity for BlackRock. But the gap between the rhetoric around companies acting in a way that is responsible versus the amount of power that BlackRock could be exercising toward that and consistently fails to do so, that gap is tremendous. For example, in the climate space, BlackRock and Vanguard routinely torpedo critical shareholder resolutions that would pass but for BlackRock and Vanguard voting against them. They also, there was a report that was put out very recently indicating BlackRock and Vanguard voting in favor of 99% of all of the directors at the largest fossil fuel companies in this country. And it sort of goes on and on through sort of each sector and each issue of the economy. BlackRock and Vanguard hold tremendous potential, but they fail to exercise it. And when confronted actually about this recently at the Council of Institutional Investors, which is a gathering space of public pension funds and others, BlackRock's vice chair was asked the question directly of, like, you have so much power, you could be wielding it so productively on climate, what is happening? The vice chair of BlackRock said, and I quote, "Patience is a virtue," which I just find astonishing because, as I was mentioning, the IPCC report says that we have 12 years to avoid civilization-ending climate disaster. There are many virtues that we can consider with respect to shareholder activism, particularly on the climate. Patience is not really one of them that I think we have a lot of luxury of holding here. So that's some perspective on the largest asset managers. The third here is there is an increasingly hostile regulatory climate, which has the potential to undermine so much of the way that shareholder activism has worked in recent years. Literally today, as we speak, the SEC is running a roundtable that is effectively a venue for a corporate front group called the Main Street Investor Coalition, which is really backed by the National Association of Manufacturers, which is really backed by companies like Exxon and Pfizer and Dow Chemical and et cetera, that are sick of being held accountable to the degree that they are through shareholder activism. And they're seeking to undermine the shareholder resolution process, along with a series of other mechanisms that shareholders use to engage companies and hold them accountable as much as possible. Even more quietly, the SEC is increasingly, under the Trump administration, raising additional hurdles and burdens that make shareholder, sort of the way we've been practicing shareholder activism harder and harder. And then the final point I'd make here is that shareholder advocacy has typically been disconnected from real people and movement power. Like when we take off our sort of shareholders and corporate governance hat for a minute and put on our sort of regular folks who care about the direction of our country hat, we all know the mechanisms that we use when our elected officials fail us, right? We all understand, we just witnessed it with this last election, the full sort of range of tools and strategies and tactics that we can do to hold elected officials accountable while they're in office and to replace them with people who are better. Shareholders in aggregate have the same power. They have the ability to go to companies and company directors and say, either you do the responsible thing here, or we will replace you with people who will. But by and large, everyday folks who care about these kinds of issues don't have a deep grasp of how their voices and how their actions can help engineer those kinds of situations. So, the purpose of majority action is to build a more sustainable, inclusive, and just economy by holding both company leaders and large asset managers accountable. And we focus on three issue areas, primarily on climate and inequality and human rights. We launched majority action to try to be able to bring some of so how do I say this? We launched Majority Action, frankly, to be able to take some of these areas where we thought shareholder activism not fulfilling its potential, and make a run at really trying to transform the work here, and doing so by harnessing what we see as the untapped power in shareholder activism along 3 dimensions. The first is really going beyond the dialogue and even the resolution process and going straight to the level of holding boards of directors accountable, particularly at companies that are operating in ways that are profoundly irresponsible to both their shareholders, to the environment, to communities at risk, to the economy as a whole. The second dimension is really about challenging asset managers. The asset managers, BlackRock and Vanguard, et cetera, any individual company that we take on, it can vary across these issue areas, but the constants across them are the large asset managers like BlackRock, Vanguard. We're challenging them to match their rhetoric with action. And then the third is that we seek to empower everyday people to be a part of creating that accountability. Sorry, there's just a little lag here. There we go. And what we're aiming for, as we think about our vision, we're looking for a virtuous cycle of delivering accountability and reform that's really powered by everyday people, really trying to bring that level of movement energy that we saw just in this last election. We see the same potential and the same need for that level of movement energy in the corporate governance space as much as we see it in the political governance space. The decisions that are happening in corporate boardrooms affect all of us just as much as the decisions happening in Congress. We believe, to catalyze the same level of movement energy to those spaces as well. So we launched this year, and before going into more of our model of how we work, I just wanted to share some views, or rather some of our experience from our initial campaigning around the gun manufacturers. We launched this year in the wake of the horrific massacre in Parkland. And it was a moment where, for a variety of reasons, including the phenomenal energy and vision and moral clarity of the teenagers in Parkland, and a variety of other reasons as well, including the fact that it was a wealthier and whiter school that was affected. We had this moment in our country where it felt like we were really kind of reckoning with this epidemic, horrible epidemic of gun violence. And that the business as usual responses of thoughts and prayers were simply not going to be enough. And we saw some really incredible things start to happen, some of which were powered by shareholder advocacy. We saw CEOs starting to speak out. We saw companies like Dick's or banks like Citi starting to actually announce that they were going to approach this work a little bit differently. And that they were going to not take the same stance of just empowering the gun manufacturers and sort of not accepting any responsibility for their role in the gun crisis. Really a profound potential moment of transformation. BlackRock even put out a piece saying how they were very concerned about the epidemic of gun violence and that they were going to be trying to engage with the gun manufacturers. And this, remember, was just on the heels of Larry Fink's CEO letter. And so it created this whole buzz of like, wait a minute, BlackRock, companies like BlackRock and Vanguard together own huge portions of the public gun manufacturers, 25% of Sturm, 20% of Smith & Wesson, which is the holding company's American outdoor brands. And the question really became, could this be a moment where gun manufacturers could actually be brought to adopt real reforms? And could this be a moment to actually put to the test the claims of asset managers that they were going to use their power more responsibly? That was the moment that we saw, and it was really bolstered, in fact, by, maybe some folks remember this, Elizabeth Warren actually putting that challenge directly to fund managers like BlackRock, Fidelity, Vanguard, State Street, et cetera. Here's an excerpt from her letter. Dear Mr. Fink, I urge you to use your financial leverage to encourage more responsible actions by these major gun companies. And in her letter, she outlines a whole series of actions that the gun manufacturers could be taking that would, in fact, be a demonstration of their acceptance of a more socially responsible mode of acting. In other words, going beyond the dialogue to actual operational reforms. Everytown for Gun Safety followed that up with a framework of actions that the gun manufacturers could commit to right away that would demonstrate their willingness to accept a meaningful level of social responsibility. They put out a series of 3 policy reforms and 3 operational reforms that the gun manufacturers could commit to right away. These are baseline things with tremendously broad support, like universal background checks, or support for the Centers for Disease Control to conduct public safety research into gun violence. Things like committing to the manufacture of safer firearms, or monitoring problematic behavior in their distribution chain. Again, issues where where there's overwhelming popular support. 59% of Americans and 43% of gun owners say they would be interested in buying guns that are childproof. So, really things that the manufacturers could commit to right away that would demonstrate their responsibility and that have a tremendous amount of popular support. So, we started to ask ourselves the question, if there are these actions they could be taking that would not be tremendously costly to them. This is not the same thing, actually, as asking them to stop selling a certain kind of product. What was going on? We wanted to get under the hood of this dynamic to better understand the relationship between the gun manufacturers and the gun lobby, which, as we all know, was vehemently arguing against as they always do, any modicum of reform coming out of the Parkland massacre. So we knew we needed to understand better the relationship between the gun manufacturers and the NRA. So let's talk about the NRA for a second. We all know that the NRA is a vicious white supremacist death cult masquerading as a constitutional rights organization. Everybody is familiar with every instantiation of this. Just recently, after a medical journal put out an article talking about public safety issues and issues associated with gun violence, the NRA put out this gem telling doctors that they needed to, quote, stay in their lane. Doctors, of course, as I'm sure lots of us have seen, have responded by posting pictures of themselves in their scrubs, in their medical scrubs, in the moment where they are dealing with gunshot victims. But this is what we have with the NRA. They are an organization dedicated to undermining effective gun safety at every turn. Lots of us know about that, and most of us also know how the gun manufacturers themselves are a major and important source of funding for the National Rifle Association. And so then lots of us come to the conclusion that the NRA is then just doing the bidding of the gun manufacturers. And don't get me wrong, there are plenty of instances where that's the case. But the reality, it turns out, is more complex and actually kind of more interesting. Here's why. The NRA is not only funded by gun manufacturers, but the NRA also acts as a kind of right-wing disciplinary force against the potential for more socially responsible behavior on part of the gun manufacturers. So this really goes back to the year 2000. 1999, the horrific massacre in Columbine, and the Clinton administration and a set of state attorneys general were sort of really bringing a combination of legislative and legal hammers down on the gun manufacturing industry. Smith and Wesson actually decided to do the right thing in the year 2000, and they entered into an agreement with the Clinton administration to try to transform themselves into a more socially responsible version of a gun manufacturer And before you ask yourself, wait, but is that a contradiction in terms? What does that even mean? It's actually a lot of the things that were specified in the in the principles that Everytown put out that I just spoke about a minute ago. They committed to the development of safer gun technology. They committed to the distribution of gun locks. They committed to, I could go on. There's a whole series of things that they said, you know what, actually, we will commit to doing this. And so the NRA turned on them, and the NRA waged a campaign. They launched by publishing a piece called the Smith & Wesson Sellout. It catalyzed all manner of grassroots revolts against Smith & Wesson. And the NRA's campaign ultimately brought Smith & Wesson to the point of near bankruptcy. Let that sink in for a second. The organization that we almost always think of as doing the bidding of the gun manufacturers brought one of the most important gun manufacturers to the brink of bankruptcy because they tried to become a more socially responsible version of itself. It's a pretty staggering dynamic. And coming out of bankruptcy, Smith & Wesson took a few years and then made a series of mea culpas and walked back into line with the NRA. The NRA has not had to wield that level of power at any gun manufacturer to that degree since, but there have been many smaller skirmishes, again, around the development of safer gun technology, where the NRA has campaigned and won to bring gun manufacturers and distributors back in line. So we asked ourselves, as we were trying to understand this dynamic and really understand kind of what it would look like to engage shareholders in a campaign around this. We were like, well, what does this really mean for the gun manufacturers as companies? Here's what it really means for the gun manufacturers as companies. The relationship with the NRA actually forecloses a lot of both socially responsible activity and new business venture activity for the gun manufacturers, and locks the gun manufacturers into a dynamic of what's known as fear-based sales. Fear-based sales is where gun purchasing behavior is driven by underlying levels of fear by an ever-shrinking percentage of the population that is buying more and more guns. It's a pretty powerful dynamic, and it's reinforced every sort of major political cycle. And you saw it in this tremendous way where in the most recent cycle, where you saw this incredible run-up of gun purchases during the final years of the Obama administration and in anticipation of a Clinton presidency. When Donald Trump won in 2016, it was devastating for the gun manufacturers in terms of their stock returns because the entire basis of their demand collapsed. This chart here shows shareholder returns, total returns of American outdoor brands, which is Smith & Wesson, versus the Russell 2000, which is the sort of primary index that it's a part of, dated from the date of the election in 2016 through the month of September of this year. They're in this dynamic where they're in this dynamic with their customers, where their customers are buying product out of fear that that same product would be further regulated in the future and make it less available to them. Which, if that's not the epitome of corporate short-termism, I'm not really sure what is. And furthermore, I can think of no other industry in which a company would not pursue innovation based on changes in technology and safety for fear that its own sort of would-be trade association would attempt to destroy it. But that's the dynamic we have between the gun manufacturers and the National Rifle Association. So I want to actually introduce you to a particularly sort of key NRA leader in this entire dynamic. Her name is Sandra Froman. She was the former NRA president and a leader at the time of the NRA Smith & Wesson campaign. This is a screenshot from when she was giving a speech to the Knife Rights Association. and she was describing the campaign and the work that they did around Smith & Wesson. She likened Smith & Wesson's attempt to become a more socially responsible gun manufacturer. She called it a deal with the devil. She called it an act of appeasement. And she said, and I quote, it was like a man running for his life, being chased by a tiger who tears off one of his arms and throws it behind him to slow the tiger down. The tiger eats the arm, really gets an appetite, and then the man is done for. That is Sandra Froman's view of what of Smith & Wesson's attempt to become a more socially responsible gun manufacturer in 2000. She's also a director at Sturm Ruger. She's on the board of Sturm Ruger, the largest gun manufacturer in the country. And so we said, okay, this is going to be a really interesting moment because we have a set of reforms that the gun manufacturers could be undertaking. We have a director who epitomizes what it means for these gun manufacturers to stay in lockstep with the NRA and the dynamic of power that keeps them in lockstep with the NRA. Here's a moment, here's an opportunity for the asset managers like BlackRock and Vanguard and et cetera to use their power to really hold this company accountable. They can be calling on the companies to adopt a set of reforms, and if they don't, they can hold directors like Sandra Froman accountable. So we dug a little more deeply into Sandra Froman. And we discovered that her NRA fanaticism was not actually the only aspect that was particularly problematic about her as a director. Racism and the NRA are deeply intertwined. Through deep research that we did, we uncovered that, in fact, Sandra Froman had previously secretly been working with the infamous Stanford professor and eugenicist named William Shockley as both an undergraduate and a graduate student to help promote his beliefs that Black people were genetically inferior to white people. She was also, we discovered, on the board and in fact an officer in a nonprofit organization called the Council for National Policy, which almost nobody had heard of until the Southern Poverty Law Center a few years ago did an expose on them. And we uncovered, the SPLC uncovered that the Council for National Policy exists to literally bring right-wing politicians together with extremists and conspiracy theorists and racists and anti-LGBTQ activists in secret multiple times a year all across the country. Sandra Froman is an officer at the Council for National Policy, and though Sturm Ruger, remember she's a Sturm Ruger board member, though Sturm Ruger disclosed many of her other nonprofit relationships, they failed to disclose this particularly critical and controversial one. So, Majority Action put out a campaign call, and we worked with our partners at Credo and Move On and Daily Kos and some of us. And we organized 116,000 signatures calling on BlackRock and Vanguard and other major fund managers to actually use this opportunity to hold Sturm Ruger accountable by voting against Sandra Froman on the board. There's also a really incredibly important shareholder resolution that was on the books at Sturm Ruger that our dear friends at the Interfaith Center for Corporate Responsibility, ICCR, had put forward, calling on Sturm Ruger to develop a gun safety report that would detail their evidence that they are monitoring for problematic behavior with their products. And disclosing how they would be approaching investing in safer gun technology. So there's a lot going on leading into this meeting at Sturm Ruger. The resolution passed, which was a phenomenal victory at Sturm Ruger. And at the same time, BlackRock and Vanguard failed to exercise the level of leadership that they really needed to with respect to these deeper level problems. There was one piece, I'm so sorry, I forgot to mention. There was a third critical governance issue at Sturm, which is that Sturm is one of a handful of companies that declares that they are literally unwilling to meet with investors to discuss concerns. It used to be a very common practice, and years of campaigning have turned the tide. And now most companies acknowledge that, in fact, meeting with their investors is an incredibly important part of running their business. However, when this phenomenal victory, this majority vote on this ICCR resolution took place, the Sturm board was defiant. They said, we will put out a report because we comply, but we will not change anything about our business. They said, we do not meet with investors. We still will not meet with investors. It really just a staggering display of NRA level defiance, not what you would expect from a public company. BlackRock and Vanguard have this incredibly baseline threshold where a company really needs to be meeting with its investors. BlackRock voted against, Vanguard voted against, as did other key top fund managers, voted against critical directors at the ExxonMobil board, for example, in 2017, over the same issue, Exxon refusing to allow members of the board to meet with investors. But when it came time to taking on the gun manufacturers, it was just a total failure of leadership by these fund managers. So then came, that was Sturm, and that was our first big campaign at Majority Action. And then our second one was at Smith & Wesson. Smith & Wesson's meeting was in the fall, in September. And for this one, we partnered with our friends at Interfaith Center for Corporate Responsibility on the effort to pass a gun safety resolution, basically the same one, at Smith & Wesson. The success of the resolution, in our view, was in question for a couple of reasons. Number one, there just wasn't the same level of public attention on guns come the fall as there was in the spring. And so our concern was there just wasn't going to be the same level of like atmospheric pressure to catalyze the vote that really needed to happen on this resolution. And the second issue is that BlackRock actually in August started publicly signaling that they were actually unlikely to oppose AOBC management, Smith & Wesson management. They indicated, they put out a report every year about their engagement, all of their company engagements, and they indicated that American Outdoor Brands met with them. It really kind of raised the flag that, like, wait a minute, there's a strong possibility that we could have the same resolution pass at one gun manufacturer and fail at another, which would just be a terrible result in terms of presenting a united investor front for accountability at these gun manufacturers. So our strategy was to try to escalate investor and public concern around the company above and beyond the resolution and call into question the fundamental trustworthiness of American Outdoor Brands, Smith & Wesson's board of directors. So how do we do this? We conducted deep due diligence on Smith & Wesson's disclosures, and we discovered a whole series of problems. Their disclosures on a number of fronts, their disclosures to investors were incomplete and potentially misleading. This slide captures one aspect of it. In 2014, Smith & Wesson lost a shareholder resolution. Amalgamated Bank had put forward a resolution and won on political spending disclosure. And so American Outdoor Brands then started putting out an annual political spending report. This kind of goes to what I was saying about how these companies have started to learn to manage the process, right? They put out these reports dutifully every year. But what the reports concluded is that the company was spending, even in election years, no more than between $100,000 and $200,000 on political, lobbying, and trade association activity. So we looked at that and we thought that just does not square with everything that we know and understand about these gun manufacturers and the relationship between them and the NRA. And so we did a bunch of digging. And we, in fact, found that there were millions of dollars in undisclosed contributions to the NRA and the National Shooting Sports Federation, which is the other kind of gun lobby trade association group. They were making these massive contributions for pretty explicitly political activity, such as the National Shooting Sports Foundation's #GunVote campaign, which put out explicit political attack messages about how Hillary Clinton was going to come and take away your guns. But American Outdoor Brands decided to hide that from shareholders and failed to comply with the spirit of the resolution that shareholders had passed at the company. That was one of the areas where there was really sort of misleading information for investors. The other, among several others, is that we uncovered a series of undisclosed issues and conflicts of interest among directors at Smith & Wesson. A sort of cardinal baseline rule of corporate governance is transparency. You need to be able to see who, if a director or an executive is at a public company, you need to be able to understand who else they have relationships with, so that you can understand as an investor what it is that they are, who else they might be beholden to, or who else they might be accountable to. One of the baseline rules about this is that if you are a director at one public company, and you are also the director at another public company, you have to tell your investors about that. But that didn't happen at Smith & Wesson. A key director, Mitchell Saltz, who was part of the rebirth of Smith & Wesson after its near bankruptcy, remember when the NRA nearly brought them to bankruptcy? Mitchell Saltz was actually the director at another company called Vertra, which was actually in kind of a competing and adjacent line of business to Smith & Wesson. Smith & Wesson ran something called the Smith & Wesson Academy, and the Smith & Wesson Academy offers training services to law enforcement and military and other things like that. So does Vertra. And in fact, Smith & Wesson, after Mitchell Saltz had joined the board of Vertra, began the process, it seemed, of actually closing down its primary training facility. So there's this kind of adjacent and potentially competitive dynamic with an undisclosed directorship. And to make matters worse, Saltz, along with the board chair of American Outdoor Brands, were both involved in another venture that also used the Vertra technology and had mutual ownership links. Again, these are all the kinds of things that as a basic mechanism of corporate governance you are supposed to disclose, and they failed to do it. So we put out a series of reports bringing these facts to investors and shared them with the proxy advisors and shared them with all of the major investors. One of the proxy advisors, Glass Lewis, recommended to investors that they vote against what's known as withhold support from Mitchell Saltz, using this research as part of that argument. So that was a critical piece, conducting and publishing our deep due diligence and bringing it to the proxy advisors. We also, together with our colleagues at Color of Change and Credo, delivered another petition, again with nearly 100,000 signatures, to BlackRock and Vanguard and other major fund managers, bringing these issues to light and saying, look, like the NRA, which I don't know if folks remember this one. Do you remember this from a few months back where this NRA spokeswoman, Dana Loesch, wanted to protest diversity on children's television, and she did it by dressing the characters of Thomas the Tank Engine up in KKK robes and hoods? A little uncalled for, and exactly the kind of behavior that Smith & Wesson's contributions were fueling in secret, right? Using money that ostensibly ultimately belongs to shareholders. So we said to BlackRock and Vanguard and others, your portfolio, right, or your holdings are fueling these attacks. You have an opportunity to do the right thing. You need to vote for the resolution, right, and you need to vote against this board member with all these additional problems. we were very pleased with how this went in terms of our ability to help frame the debate going into the meeting. This is a piece from Bloomberg that came out just a few days before the American Outdoor Brand shareholder meeting. As I said earlier, part of our strategy was to escalate the issues above and beyond the resolution. Often resolutions are both about the particular topic, and they're also a measurement of whether investors are willing to rebuke or side with management. And so we saw this piece. This is just one of the series of pieces going into the meeting. Smith & Wesson under siege by investors, cops, and priests, which really brought together all of these issues. And I'm thrilled to say that we won. The incredible persistent leadership of ICCR and their tireless organizing over many, many years resulted in this incredible victory at Smith & Wesson. It was a much tighter victory. It was 52-48, so it was very, very close. And we believe that the kind of work that we were doing really helped push this over the edge. Another thing came out of this, and I actually want to switch my screen here for a minute. Just give me 1 second. I want to share different application. Can you all see?
By writer Lauren Simon, who just.
Can you all see and hear this? Yes? Okay, excellent. So the NRA began to actually take notice of what we were all about. You may notice, or those of you who are friends of Transform Finance may note the highlighting both of our work and the work of Morgan Simon, longtime leader at Transform Finance.
Describes herself as writing about money and social justice, asks the question, is gun control an issue for policymakers or investors? She's touching on a subject we have discussed quite a bit here, corporate gun control. Now, in the column, she argues that corporations have a moral imperative to, quote, thoughtfully address the question of how people acquire guns, at what age, and for what use. And thus, it is logical in her estimation that the investors in those companies, the public ones anyway, have to manage that moral imperative by forcing companies to engage in corporate gun control. The idea here, essentially, is that true believers of gun control should start infiltrating public companies as investors, not to have a vote or a voice on how to improve the profit margins or how to increase the value of shares, but specifically to push gun control. In the article, she interviews a progressive Eli Kasargod-Staub and James Rucker, co-founders of a group called Majority Action, which are, quote, groundbreaking, end quote, in employing this method. They say they created the group to, quote, enable everyday people to use our power as shareholders to affect the behavior of public companies, end quote. So in other words, to take the social justice warrior view of the world and transfer it to the company boardrooms to improve their behavior, because the most important thing is that everyone behaves the way that progressives tell you to. There's a lot more in the very long article discussing corporate gun control, but it's all basically pointing to the same thing. It is an effort to influence the culture, not through persuasion, but through force. The left can't be bothered to make their case to enough people to get things to change. They've learned early on that when they started using the government to force their way of thinking on everyone, well, that seems to be the most efficient way for them. But capitalism just wouldn't quit, and since business responds to demand, companies continued to reject the culture of America by doing things like making firearms that people want. So progressives took what they learned about using the government as a weapon and are intent on doing the same thing to business. And don't think that it's just gun manufacturers that would suffer if their ploys pay off. Imagine the influence that shareholder activists could have on every conceivable business.
That was really quite a trip to see ourselves there on NRA TV. It was 1 second. Let me just go back to my my deck here. Doesn't happen every day. Can everybody see the deck? Yeah. And, you know, we wouldn't have put it all the same way that the NRA did, but one of the positive outcomes is that we realized that there was something that we actually agreed with the NRA about. Imagine the influence that shareholder activists could have on every conceivable business, was this line that came out of it that we just felt like, frankly, really captured what we were all about. So now I want to zoom back out from our pilot work around gun manufacturers. Again, we launched this year with those particular campaigns, and what we wanted to do was really be able to help illustrate for folks what we saw as some of the potential for escalating shareholder activism beyond the resolutions and toward boards of directors. And so I want to just kind of call attention to some of this methodology piece here, which hopefully will feel familiar having heard the examples. But this is now really how we approach our work. It really centers around this piece in the middle here under outcomes, creating campaigns that create clear choice moments for both companies and asset managers, moments where there is a clear, bright line about what is responsible and what is not responsible, and where there are consequences in either direction. And the way we do that is through our blend of deep due diligence and investigative research, institutional investor engagement, retail investor organizing, and campaign partnerships that sort of bring non-traditional actors like other activist organizations into the mix around these critical corporate governance issues. And as I was saying earlier, we use it to both drive accountability at individual companies that can vary across a wide range of issues, and also at the same asset managers that consistently are part of the problem across a variety of issue areas. That's the methodology that we've developed, and that's the methodology we're really excited about expanding or bringing to an expanded set of work in 2019 and 2020. So with my last few minutes here, just wanted to share a little bit of a preview of what's coming. We recently actually, it's been a really incredible ride for us the last 9 months. We launched Majority Action, and then we just recently completed a merger with an incredible organization called the 50/50 Climate Project, which also comes out of the labor movement and is sort of trying to bring the same kind of hard-hitting governance-focused activism to the climate space. A campaign that you will hopefully be hearing a tremendous amount more about in the new year that we'll be running is really going to center around a set of utility companies that need to be transforming their business models. And in light of the IPCC report, remember I was talking earlier about this IPCC report, we have 10 years to get ourselves on a profoundly different track with respect to the climate if we are to avoid civilization-threatening and, it should be said, portfolio-threatening climate disaster. And yet we have a whole series of utility companies in this country which are critically, we need them to transform, but they are still heavily reliant on coal and natural gas and all manner of things, and they are not undertaking the level of transformation that they need to. So we'll be piloting a strategy in the new year that is designed to escalate that issue all the way to the board of directors. We don't have time to wait. We need to be holding them accountable on that issue. R&D and other domains. We are looking a lot in the student debt service space. I'll give you an example. Navient, which is the former Sallie Mae, which is one of the really dominant student loan servicing companies in this country, widely known for their abusive behavior towards student debt borrowers, an incredible level of regulatory action and scrutiny from groups ranging from the CFPB to coalitions of state attorneys general to the American Federation of Teachers. And last year, in response to this, in response to the systemic level of economic risk being caused by the student debt crisis, the Rhode Island Treasurer's Office filed a shareholder resolution at Navient calling on them to be held accountable for their bad practices. 43% of shareholders at Navient voted for this proposal. BlackRock and Vanguard both voted against it. We would have a greater degree of student debt accountability if that BlackRock and Vanguard had voted for this proposal and they failed to do so. So that's another area that we're looking for the coming year. We also have a set of work that we're really excited about in development around private prisons and additional work around the firearms manufacturers. For example, we anticipate that Sturm will most likely put out a report and do so in a defiant and continuing to be in a closed and sort of cloistered way. So we are hoping to be a part of campaigns to drive a broader level of accountability and be able to continue to raise going to escalate to the board of directors. Now, stepping back for just a minute and taking off my executive director of Majority Action hat and just putting back my springboard hat on just for a second. Majority Action I've been talking about brings together this set of capacities: corporate and strategic research, strategic communications, institutional investor engagement, retail investor organizing. We are also have in development a venture called Majority Shares, a companion to Majority Action. If you recall all the way back to the beginning of what I was describing, the largest asset managers, BlackRock, Vanguard, etc., they have such massive holdings in significant part because of their running these broad market index funds. So we have in development our own set of broad market funds that would be able to serve a set of functions. Number one, to be a lead investor proponent that would be able to drive change at particular companies to being more responsible. The second is to be an exemplar of what responsible proxy voting actually looks like. And the third is we aspire to have Majority Shares ultimately be a net funder of Majority Action campaigns. So that is what we are building today, the kinds of campaigns that we're driving toward 2019 and how we're looking toward the future. So with that, I am going to turn it back over to Andrea. And I just want to say I tremendously appreciate everybody joining for this conversation today.
Thank you, Eli, both for the fantastic work that you're advancing and for this great and comprehensive presentation of the landscape as you see it, as well as these new strategies that you and your colleagues have been driving. I have a couple of questions that came in offline, and I see there are some others that are floating in. The first one was on the timing issue that you brought up, right? And generally, any sort of engagement with companies is a fairly time-consuming or sort of has a relatively long timeline if it has to go to resolution. So the question was on how you view that time issue with respect to the engagement as part of a broader or sequencing type of strategy around a certain action. I hope that question makes sense. I'll give you another one so you figure out how you wanna coordinate them or put them together. Is on the coordination of the efforts around all the campaigns that are needed right now. Who decides what comes first, and how do we avoid the energy getting dissipated between potentially different campaigns given the number of issues to be tackled?
Totally. Those are great questions. Let me take the first one first, if that's okay. The question on the time-consuming nature, I want to respond with this comment, which is that the context in which these kinds of engagements and campaigns happen, the sort of broader cultural context in which these engagements and campaigns happen, can matter a tremendous amount. Investors, institutional investors, fund managers, et cetera, are not immune to the sort of broader climate in which we all operate, if that makes sense. And dialogues can progress slowly, or dialogues can progress quickly sometimes based on the degree of attention and scrutiny. I'd note, for example, the phenomenal work of ICCR in their engagement with the CEO, I believe it was, of Dix, where they met with Dix and in the wake of the Parkland massacre, and realized that actually they had a tremendous amount in common, and that they had a lot that they wanted to accomplish that was very much aligned, and changes started happening very, very quickly. So the context in which all of this is happening can matter a tremendous amount. Part then of the goal of the work is to be actually helping to shape that context. This was a piece I'm also responding here. There's a question that came over the chat about the effective ways to engage retail investors and the online campaign lever. We see that as a critical aspect of what it means to be trying to drive this kind of engagement and campaign work in a broader cultural and economic context. We need to be shifting the expectations that we have of what responsible corporate governance even looks like and involves. And those expectations can shift very rapidly as culture and movement happens. For example, in the wake of the Me Too movement, there's been a series of accountability moments at corporate boards. At the Wynn Corporation, the casino operator, there was a stunning rebuke of a really problematic person in leadership at the company for exactly that reason. On the question of coordination, I want to say a couple things. One, we have far more problems than we have people working on them. And so even though there are a large number or a significant number of highly capable shareholder activist organizations, and there's a lot of work to do to be able to keep that coordination moving well, shame on us if we can't figure out how to do it, because the number of companies pursuing problematic and short-term behavior that is causing harm both to long-term investors and society and the environment at large is vast. I also want to say that there's a lot of room for different organizations to be playing different kinds of roles in the shareholder activist ecosystem, right? And coordination can be about company to company, but coordination can also look at a variety of kinds of roles. Some organizations specialize in the sort of deep dialogue work. Some organizations like ours really specialize in the due diligence and campaign function, right? There's a sort of series of ways that we can be best coordinated, and I think it's important to pay attention to all of those kinds of dimensions. And then the last thing I would say is, with respect to these kinds of dialogue questions, is that we distinguish between dialogues that are about substance and dialogues that are about baseline commitments to responsibility, if that makes sense. In other words, I'll use the utility company example because this is going to be a big piece of our work in 2019. There are many, many different paths that utilities could potentially legitimately take to decarbonizing their electricity generation. And reasonable people can disagree about what the best path for any given utility actually is. And that is an incredibly important dialogic process that has to go on. But we distinguish between that kind of dialogue and instances where a company has failed to accept responsibility for the need to transform in the first place. If a company hasn't accepted responsibility for the need to transform, then that kind of dialogue isn't really possible in the way that it needs to be. And so we need to collectively bring a company to the point where they are ready for that through the kind of accountability activity that we describe. And we think that helps set the stage for the kind of long-term productive dialogue that we really need to be having.
Great, thank you. Let me throw out one more that came through the chat. So, Eli, you mentioned mechanisms for accountability to organizers and people affected. Can you talk more about how that is structured and plays out within your campaigns? So I guess your own accountability to organizers and stakeholders.
Oh, I see. Sorry, I didn't quite understand the question as it was written. That makes sense to me. Can I just restate the question? I want to make sure I'm getting it. The question is, how are we ensuring that we are accountable to the sort of broader set of underlying goals? Is that right?
That's how I'm understanding it. Yes.
Excellent. The answer is evolving and through a variety of mechanisms. We see ourselves as accountable to a set of shared movement goals. We also operate in a context that is distinct from other kinds of movement contexts because we are trying to operate and we do our campaign work in a way that is about the intersection of long-term investor interest and the interest of society and environment. And so a lot of our work is actually kind of figuring out where is it that we are at the that there is a harmony between those kinds of interests in a way that allows us to propel powerful campaign work forward. The kinds of campaigns that we seek to run happen through this intersection of movement power and investor power. So the way that we are held accountable is that literally, in order for our campaigns to work, we have to be in partnership, right, with movement organizations. And so it's through those relationships and partnerships that we ensure that we remain faithful to the underlying goals that we're all seeking.
Terrific, thank you. And one question from me, Eli, if I can take that privilege. Most engagement that we've seen historically is really directed at one company at a time, right? And we've seen through, let's say, George Seraphim's work at Harvard this year, this going industry by industry. But you seem to be bringing in this layer that at the same time as you're challenging the company, you're challenging the managers. Can you tell us a little bit more about like the intersection between those pieces and whether the emphasis is really on challenging a manager or on challenging a company, and how the two, I imagine, in your view, reinforce each other?
Yeah, absolutely. That's one of the most central problems that we see across the shareholder activism space, and it is what we live in. We live and breathe that question, I feel like, every single day, which is to say that the same asset managers are on the hold these massive positions in just about every public company, and they take consistently problematic positions across all of these different kinds of issue areas, whether it comes to climate or inequality or human rights or additional issue areas as well. We seek to both, and I'm just going to, if it's okay, I'm just going to step back to the methodology slide for a second, if that's all right, just to have this up as I'm talking. We seek to both catalyze that dynamic to hold individual companies accountable, while also exposing those moments when the asset managers fail to do so. So, for example, Larry Fink, the CEO of BlackRock, was recently given an award by a refugee humanitarian organization as the, quote, humanitarian of the year. This was just a few weeks ago. That's, as we saw it, a particularly missed opportunity, because Larry Fink actually has a tremendous amount of power to actually be the humanitarian of the year through the way that BlackRock shows up in all of these engagements. For example, BlackRock and Vanguard together own a third of each of the private prison corporations, CoreCivic and GEO, the two largest publicly traded private prison corporations, the ones that are detaining and often abusing the refugees and immigrants who are the population served by this international humanitarian organization. They also have had many opportunities to hold those companies accountable and consistently fail to do so. They re-elect the directors, they oppose shareholder resolutions calling for more accountability, etc. Similarly, they hold this dominant position in the global debate about climate and climate change, and they could be using their power so productively, and they consistently fail to do so. And as we all know, climate change is a critical driver of both the refugee crisis today and laying the groundwork for a global refugee crisis, the likes of which are almost unimaginable to us today over the next 20 years if we don't stop. And as we saw around the gun violence issues, many of us are familiar with the way that our own gun manufacturing and violence spills over into other countries.